Hey guys, welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. And oh boy, the technical analysis. Honestly, since yesterday, when I made that video, the market was being very dynamic. The Nasdaq fell. At the time of that recording, it was down like 2+% or so. And by the end of the day, it was actually positive. So that intraday swing from the low of the day yesterday on Monday to the closing price was like a 3% gain. That's exactly what we needed on the charts because we were at the very bottom of our ascending channel and it looked like we were selling off and the sell-off was accelerating and that buying pressure came up big time. So we're now attempting to stay in the channel and find more buying pressure, but today Federal Reserve Chairman Jerome Powell is talking and the markets so far haven't been doing too much, a little bit up, a little bit down, but more so less waiting for him to speak. And at that point, I'm speculating the market could swing big time. All of a sudden, if you start selling and going toward the downside, then all of a sudden yesterday's Monday move becomes a bull trap. Then all of a sudden we continue making more lows. But honestly, if Jerome Powell says anything even mildly dovish about inflation, even the most mild of good news could propel the markets toward the upside, getting us back in that channel and dare I say it, getting back to all-time highs. Not to mention, we're also getting CPI data this week, as well as earnings start on Friday, specifically with the big banks into the upcoming weeks with all the big companies reporting very, very soon. All right, and getting right into the candlesticks, the Nasdaq, the QQQ. So we see yesterday on Monday, we opened up at around 374, and we dropped all the way down right away, right below 370, and recouped the losses and went all the way up and closed right back into our channel at about 380. And today we're seeing some sideways chop. We see that doji candle so far in the day. We haven't closed yet. We still have to see how Wall Street reacts to Jerome Powell and see whatever he has to say from inflation. But so far, so good. We're in the box. And if we scroll back for the last year and a half, every time we've reached the lower part of this trend, we've always recovered very nicely afterward. Once, twice, 3 times, 4 times, and potentially 5 times. However, when we take a look at the weekly, we notice that last week was the first time that we have closed below the 20 EMA on the weekly again since the beginning of the pandemic. We have opened below, we have gone below in price, but we always closed above it until last week. Now that could mean nothing or it could mean everything. It's so dynamic in the market, either A or B, but if we take a look at the S&P 500 right now, we're balancing around that 50 EMA on the daily. If we take a look at it on the weekly, we see so far we have a doji candle above the 20 EMA that's acting as a very strong support line and has for most of the pandemic. And if we take a look at the Dow Jones, this one faring better because it's less reliant on technology, still above the 20 on the weekly. And if we take a look at the daily for this one, we're between right now the 20 and the 50, trying to find support at this 357 level. All right, and taking a look at Bitcoin at the 4-hour time frame, we see that we're forming a little bit of a base ever since the drop from 46,000 all the way down to 43, and then right now at around 40,000. But we still are below the 20 EMA and we're unable to crack it. Until we do, we're going to continue heading lower. And you could probably say almost the exact same thing with Ethereum, both of them on the 4-hour time frame. Ever since the drop from 3,700 all the way down, we found a little bit of a base at the $3,000 mark. And it makes sense, $3,000 for Ethereum, $40,000 for Bitcoin. It's a pretty strong psychological round number. Looking at the VIX, so we found support on the 20 and the 50. At the 19 mark, right now we're hovering around 20.7. Again, we're just waiting for Jerome Powell to say what he's got to say. If we look at the fear and greed index right now, again, we're just neutral. We don't know as investors how to feel. Are we going to do really well for the upcoming week and recover, or are we going to continue feeling more and more pain? Looking at individual stocks, Apple on the daily right now at 171, just hovering between the 20 and the 50. Again, this is one of the biggest movers of the market. It makes up such a big part of the market at almost $3 trillion, now less because of the sell-off at around $2.8 trillion. Again, just waiting whether it's going to continue making new lows, go to 165, 160, or head back up above that 20 EMA. Microsoft, again, this one's had a pretty rough sell-off as well, was just at about 340. Oh, it felt just like yesterday and now sitting around 310. Yesterday reaching a low of 305 and now recovering a little bit, but well off its moving averages. And again, Microsoft is about, let's say, 8% from its all-time highs. When you have a chance to nibble at it when it's 8% down from its all-time highs, you nibble at it. And then if it goes down more to 10%, 15%, and so on and so on, you get more aggressive. Of course, there's a finite amount of cash everyone has. It's just so hard to go bearish against any of the FANG stocks for the medium to long term. And sometime in the future, we're probably going to look back at 2022 and say, damn, I wish I could have bought that dip My question is, how much more fear is there still to instill in the market? How much do we not know? How much is going to catch us by surprise? I mean, that is the unknown unknown. We have no idea. But how much worse do the known unknowns, so interest rates, how much more is that going to affect us? Taking a look at Google on the daily as well, similar to Microsoft, well off its moving averages, well off its all-time highs, an excellent business that yesterday we could have nabbed under $2,700. Amazon also, and I always refer to this trend line that I drew over here, it broke it and with conviction, but yesterday we actually see a nicer hammer candle on Amazon stock than we probably see on the indices because it was such a strong rejection on the downside. And makes sense because Amazon hasn't really gone much in the last year or so, whereas Apple, Microsoft, and Google have gone up so much. Looking at Meta Platforms, we're at the bottom of our channel. And if we zoom out a little bit, we also have this uptrend that we touched back in 2020, early 2021, early December, about a month ago. So we still have a little bit more potential room to fall, but we're nearing the bottom of our channel. I mean, we can always adjust these lines at any point. We're below the moving averages, just waiting for Meta Platforms to eventually go back up. I really look forward to all these companies reporting their earnings, taking a look at Tesla stock. This one, again, just being the roller coaster that it is, up, down, up, down, up, down. Holding that $1,000 mark, again, being as volatile as it is, consolidating after a huge run-up, which it usually does. And eventually, most likely, the stock price will just continue to go up. I mean, Tesla as a company is continuing to surprise to the upside and producing amazing numbers. Taking a look at NVIDIA, this one just hanging on to the bottom part of this channel. We filled in this gap yesterday. We still have this gap at around 235, so if we do have more weakness, NVIDIA is a great company. It will be very volatile toward the upside and make a lot of people a lot of money over the upcoming decade, but it will also have epic downswings as well, but that's all part of the business. Investing long-term in growth companies. All right, and that's the end of my video for today. Let's see what Jerome Powell has to say and how it's going to affect both the stock markets and the crypto markets. As always, subscribe and like, and I'll see you in the next video.